In the world of speculation, there's one act that separates the successful from the ruined, and that act is the exit. Anyone can enter a trade, fueled by optimism, belief, or even gut instinct. But knowing when to leave, when to cut your position and protect your capital, that is an art form, a skill so elusive it has cost traders billions. We're about to dive into the timeless wisdom of one of the greatest speculators to ever live, Jesse Livermore. His career wasn't just about picking the right stocks. It was about understanding human nature and mastering the exit. Every trader has been there, caught between two powerful forces, fear and greed. They either take small profits too quickly, terrified they'll vanish, or they hold on too long, watching their gains evaporate in the market's unforgiving tides.
Livermore saw this struggle as a fundamental flaw of human psychology. He understood that the amateur trader doesn't sell when the market tells him to. He sells when his emotions take control. Fear, hope, ego. But for Livermore, trading wasn't about guessing the market's next move. It was about discipline, precision, and emotionless execution. Livermore's genius lay in his ability to remove emotion from trading, to rely on cold, hard logic. For him, the perfect exit wasn't a mystical secret or a price to guess. It was a signal, a condition he could recognize, a moment in time when the market told him it's time to act. Let's explore 3 core rules he followed and how they transformed his approach to speculation. The first rule was simple. A trade must show profit immediately or be abandoned. No waiting, no hoping. If a stock begins to move against you, the market is telling you something. The first loss is always the smallest loss. But the amateur trader does the opposite. He holds on, hoping for a turnaround, thinking that averaging down will fix the mistake. Livermore called that ego. It's vanity, and it's dangerous. The professional must accept the market's verdict and move on. The second rule: when a stock fails to make a new high after a pullback, it's time to sell. The market doesn't always move in a straight line. It breathes, rises, pulls back, and rises again. But when the rally stalls and it fails to break the previous peak, the trend is exhausted.
This isn't a guess. It's a logical conclusion based on market behavior. Selling on this signal is prudent, not fearful. It's about locking in your profits while the trend is still intact before it fades away. And the final rule, the most decisive of all, is the pivotal point rule. When the price breaks below the last reaction low, the trend has reversed. This is the point of no return. Livermore's system wasn't about being emotional. It wasn't about fighting the market. It was about recognizing a signal. When the trend is changed, you act, no questions asked. This rule ensured he never overstayed a market, never allowed his profits to disappear into a reversal. These rules weren't just guidelines. They were defensive strategies, tools to ensure survival. By applying them consistently, a trader moves from emotional gambling to professional execution. The first rule, cutting losses early, shields you from catastrophic mistakes. The second rule, selling after a failed rally, secures profits while they're still available. And the third rule, honoring the pivotal point, ensures you're never caught in a market reversal. These principles don't promise to catch every small move, but they guarantee survival. And in the world of speculation, survival is the first step to long-term success. Livermore's greatest secret wasn't about having the best predictions. It was about having the discipline to act when the market tells you to, not when your emotions do. The ideal exit point isn't a price. It's a state of mind, a moment when your system commands action without hesitation. If you want to become more than a gambler, if you want to learn how to master the market, you must embrace discipline and control your emotions. Music fades to a thoughtful end. Thanks for watching. If you found this valuable, don't forget to subscribe and hit the bell for more insights. Until next time, remember, the market doesn't care about your ego. It cares about your ability to adapt,